Hello traders, in this video we're going to analyze the euro dollar and pound dollar. My name is Chris from Elite Currency, and as always we're starting with the euro dollar. Hopefully you saw my updated analysis on Tuesday on the Elite Currency website. If there's anything new that I see the day after this, the previous video, I make a analysis on our website and blog, and there I indicated when price was about here that we're probably in a wave 5 to the downside, this being a wave 1, 2, 3, and I concluded that this is probably an ABC pattern for a wave 4. So that indeed took place. We did get the continuation lower, and the price was at around 120.40, 120.45-ish, I guess, and has reached the main target at 120, up down to 119.80. We said that that could be even possible that price might dip as low as that. It hit actually 119.85, so right in that target zone, and we're seeing some wicks in reaction to the WIS 5 at that moment. Now, this 5-wave pattern, we said on Monday, is probably part of a bigger ABC. We have been analyzing and following, of course, this euro dollar very closely for years now, but yes, we had a continuation here, wave 5 of C, finishing a bigger wave A. Then we expected the reversal at 117.50, 117, and a 5-wave up for wave A. That did happen. We had a 1, 2, a 3, 4, 5 with a 5-wave and 5, finishing in A. Now we expected a 5-wave down of part of a A, and we're expecting 3 waves up for B, and then again a 5 waves down for an ABC red zigzag within a bigger blue, within a bigger wave blue, wave B blue. Sorry. All right. So with the wave A, the 5 waves in wave A finished. That seems to, or worst case, wave 1, doesn't really matter. That seems to finish the first part of the zigzag. We're expecting an ABC down now with blue B, and then a 5-wave up for blue C. So let's focus on this red ABC within blue B. Main target of the red ABC and the bouncing spot for blue B is the 61.8 fib at 118.75. All right. So we just reached, one of the reasons why we thought the price could go to 1980, 120 was the fact that there's a 38.2 fib. That's reason number 1. 2 is there are a lot of moving averages and tops as well. So that seems to be a strong bouncing spot. I do think that a reversal seems likely there. At this moment on the 4-hour chart, we don't see any particular strong reaction yet. So it might dip a little bit lower to hit that 119.80. Or if there's a strong bullish candlestick pattern, that could indicate that we're seeing a bounce. Typically, when the 144 EMA gets tested and broken, price can make a little bit of a lower low, but ultimately, because of the long-term moving averages, the second fractal gets a bigger bounce. So that would confirm what we're looking at, that the fact that there's a 5-wave completed with the strong 38.2 fib, it seems likely that the red wave A will soon finish, maybe a little bit lower, but ultimately soon we should get that bounce, I think, to the upside. That's what I see over all these years, typically the patterns that play out around these long-term moving averages. Of course, nothing is guaranteed, and things can always develop differently in unique cases and in case-by-case scenarios. But on average, this is what I'm expecting. So either bullish candlestick pattern to confirm the end of the wave 5 or slight lower low still. Let's take a look at the 1-hour chart. So this morning, I didn't make the video before this morning, but one thing you can always do if you think that if you see a wave 5, you can always then try to look at lower degrees and see if that wave 5 is finished, or any wave is finished, right? By looking at the sub-degrees of the wave. And there you could see maybe a 1, 2, 3, 4, 5 developing. But if you're not sure, I think it's always useful to put a fib and on the potential price swing and wave. And you can see that price respected the 50 fib and the 21 EMA zone. So that's a pretty good clue at that point that price is respecting the wave 4. Now, of course, if it breaks above the 50 fib and 20 EMA, then that could indicate the end of the wave 5. But it didn't, and it actually stayed below it and made it dip lower. So it seems like we had a 1, 2, 3, 4, 5, but within 5, there's a 1, 2, 3, 4, 5. So it could be finished soon. Let's take a look at the 50-minute chart now, or even the 5-minute chart. And Is there one more lower low possible? I think the answer can be probably found in the 5-minute chart, because if this is a 1, 2, 3, 4, 5, so wave 5 of 5 of wave 5 of wave A, then sorry, if this is a 4, sorry, and one more 5 of 5 left of 5, then price should stay below these fibs. So that's a key zone. If it breaks above, then we might be looking at the end of this bearish swing. If it stays below it and re-breaks below the 20-day, there could be one more lower low for about 10 pips, right? Nothing. A scalp trade, perhaps. I wouldn't trade it. It's too small for my taste. But I would wait for the lower low and look for a bullish bounce at 119.80. Now, a bullish bounce, I think, is best reviewed on probably the hourly chart or 4-hour chart for a candlestick pattern to the upside. Because, of course, this is my best guesstimate, but if you look at waves in such a small scale and small detail, it could, of course, could easily play out a little bit different than I'm expecting now. This is my main thought at this moment, 119.75, 119.80. But you never know. Sometimes waves can extend, and if it does extend, for instance, it could go right away to the 50 fib, right? Maybe it doesn't stop at the 38. It just falls straight down to the 119.25, 50 fib. To me, that doesn't seem likely. I'm just talking about what-if scenarios. So it's always good to be cautious and on guard. That's why it's good to see actual candlestick patterns emerge at the 38th fib. I don't know, hourly or 4-hour chart to confirm that bounce, at least a little bit. Otherwise, there's always that risk. So, yeah, let's see if, once again, if it breaks to the upside here above the 144 EMA, it looks bullish. In that case, I would look for break, pullback, continuation. This pullback here would be the best way of trading it, in my view. We would have inverted head and shoulders, and this could be the wave A. This 5-wave would bend, this bearish wave with the, or bearish swing with the 5 waves would be finished for the A, and we're expecting a blue ABC up. And this end of wave B and the start of wave C would be the best way, in my view, to trade it with the inverted shoulders, with plenty of space from about 120 to into the 121 zone, I guess. And maybe, I mean, if things play out perfectly, maybe even a head and shoulders here on the top as well. So, yes, if there's any bullish candlestick patterns on 1-hour, 4-hour chart, or if it breaks above the 20-day, pull back and bounce, I think this bounce looking good for a reversal, or not a reversal, but a small kind of bounce trade to the upside, in my view. But otherwise, yeah, looks like it is in a bearish mode, but looks like it's soon going to finish and make this retracement. And then again, we're expecting downside, 5-wave down after that. Okay, I think that's it. I don't think I have anything else I want to mention. Of course, if it breaks, if the upside is so strong that it breaks above this top, then once again, as I mentioned on Monday, my bearish ABC zigzag analysis is out of the window and invalidated. Pound USD. As I was also indicating, it's a very rangy, choppy chart, so I don't like it too much at all last week's, and I had a fib on just in case it would respect maybe something like this fib at the 50 fib, but it didn't. It just blasted through it. So you can see it's just a very rangy environment and big consolidation, and it remains probably the best just to keep an eye on the trend lines and look for a break, because at this moment it's very indecisive. As you can see, we had this double bottom and the break was expected in part of ABC, but after that we had move down and move up, and it's really getting tighter and tighter. These spaces are getting smaller and smaller. And I don't see any particularly interesting trades in this zone at this moment. Probably, I mean, if it hits support or resistance, it might bounce up from support or down from resistance, of course. The breakout could be something to think about, but it is vulnerable to a false breakout as well. So looking at a good daily candle close after the break happens is one way of avoiding a false break and trying to find a trade into the direction of that breakout. I have no inspiration for any trade ideas on the pound dollar at this moment. So I would just leave it at that for the moment and do an update again on Monday. But generally speaking, I think if we look at the higher time frames, to me it looks more likely that it will break to the downside, with this being an ABC completed, and well, actually, this is also looking corrective, so I think it's 50-50. It could also easily extend the wave B like this, A, B, C, within ABC. Ultimately, I think it's going to make a leg down. That's what I meant to say. A leg down to the 144 EMA and basically 233 EMA support zone and complete the bearish ABC. Whether that wave B is finished or not, that's something that I think is very unsure from my point of view, and time will tell. And I'm open to both scenarios, that wave B is finished or it will still make one swing up. I think key probably would be the breakout, the breakout of the support or resistance trend line on this daily chart. So that's my main thoughts on the cable. If you're interested, of course, in more of our automated trading, manual trading, or my own SWAT methods, how I analyze price swings, price patterns using moving averages, fibs, and fractals, check out SWAT, SWAT, ebook or the course. Wish everyone great trading and see you next week. Cheers.